Right, so we're back at it again. This time we are going over indices and the quarter theory. Applying the quarter theory to indices the same way that we do with our forex pairs with GBP is the same way we can apply it with US 30 and JER 30 in our indices. So to start off the video, I'm not going to go through and redo all my quarter points, but I'll go over exactly which one where they're at. So it's the same way: 29,500, 29,250. Then we go down to 29,000. So we're just going down by 250 point intervals. So 28,000, 28000, my first 28250, 28500, 28750, 29000. Now each 1,000 pip range, the 1,000 point range is going to be considered or majors. Every 50 point, it's considered or is essentially considered our minors, and the 25 and the 75 would be considered what's it called? Sorry, my bad. I lost my train of thought. Or 25 and our 75 are uneven lines. So basically what that means is, they're continuations. They're usually just continuations of what's already going on. At the 25 and the 75 line aren't when we're looking for, key entries into trades where we could be riding in between our 1,000 or 100 pip range. So when indices, it's 1,000 pip range. With forex pairs, it's 100 pip range. Every 25 pips with the forex, and every 250 pips with indices. So, or majors are that 1,000 and that 50, that medium, that 50%, that 50 point range of the 1,000 pip range. So going over our indices, it's the same way. It's the same exact thing. As you see, I have my lines already marked up. Just looking at it from the bigger picture, I'm on my 4-hour time frame right now. Everybody always asks, does it matter which time frame do you mark it off on? No, whatever. It doesn't matter. It's easier to mark off the quarter points on the higher time frames, so you can get them all on your screen at once and not have to be dragging up and down. But those lines stay the same. What I recommend after you put in your quarter points is lock the lines. So you'll lock the line, and then you'll be able to move around your trading view without having to, without worrying about those lines moving around. So getting into it, on our 4-hour chart, we see structure better. On our 4-hour and our 1-hour chart, we're going to see structure. So that's why I love my 1-hour and my 4-hour chart, because we can see structure. We know where price is going to go. We know what we're looking for. And it's really as simple as that. So going over US 30 in this past week, the same way as, what do we do on our 4-hour chart? What do we start off by doing? We know our 4-hour chart or 200 moving average is basically telling us everything that's going on in the market. So in that instance, what are we boxing off at that time? What are we looking to box off? We're looking to box off our 200 moving average, right? We want to look for price to trade into this 200 moving average between our 1-hour and our 4-hour time frame to find strong moves, strong continuations, or reversals of the market. Like I said, take notes on everything that I talk about and everything that we go over. Note takers are money makers. So, like I said, 200 moving average, support and resistance, acts as support and resistance. We're going to find strong moves off of our 200 moving average between our 1-hour and our 4-hour time frame. Then we confluence that in with our smaller 15-minute, 5-minute, 30-minute time frame, and we know when our trades are valid, when we can hold them, when we should be scalping, and just like that. So on my 4-hour time frame, I box off my 200 moving average. When I go down to my 1-hour, let's go down to our 1-hour and go to that same zone. What do we see where our 1-hour moving average is at? So we see our 4 hours down here. Now what do we see, or where our 1 hour is at? In this zone, right? This is where our 1 hour moving average is at the same time of down there where our 4 hour 200 was at. So what do we see now? Like I said, it's in combination. This is our quarter points. Quarter points act as support and resistance, just like the moving average. It's all mental, it's all psychological levels. So what do we have? At our 200 moving average, when price is above our moving average, we're looking for buys, and when price is below, we're looking for sales. Higher time frame wins every time. So what do we have? Our 4 hour 200 MA is sitting below, is sitting essentially below price. So price is above the 4 hour 200 moving average. Above this moving average, we want to be looking for buys. Now we know on our hour time frame, we have price trading into this moving average. Price is trading in this moving average on the hour time frame. So when the moving average, when the 200 is going through the candlesticks, we have consolidation. Higher time frame, stronger consolidation. So that's exactly what we see on US 30 in this moment. During January 2nd to start the year, it was in consolidation. It was bouncing in between this range right here. As we see, price was bouncing, never came all the way up to or 29,000 quarter point or major QP. Price came back, traded down, was trading in between this range the entire time. Now what do we have that was down here that whole time that was basically going on while price was trading into this range? Price was trading all around this 200 moving average on the 1 hour time frame. What do we see? Price came and dropped below or 200 moving average on the 1 hour. Now, where does price come and trade exactly into? Price comes and trades exactly into our 250 quarter point, which is also our 4 hour 200 moving average. So what do we get off of that? We get a strong rejection off the 4 hour 200 moving average because the moving average is acting as support and resistance. Tells us the overall trend of the market. If we're in a buyers or sellers market, we see price comes down, rejects that 200 moving average. We look to the left, and we see that prices already came, retest or major QP, and started to make its way to the upside. We're clearly in a buyer's market in that moment of time. Then after that, what do we have? After your bounce off your 400 moving average, you have 250, 500, 750, 1,000, almost over 1,000 pips with US 30. Almost over 1,000 pips with US 30. And what do? We don't do anything different, right? So we already got our box drawn. And what do we want to do all the way across now? We would be wanting to drag it. And what do we have if we were coming along on that 1 hour time frame? You see prices respecting that zone the entire time and pushing all the way to the upside. When price finally comes and trades back into our zone, what do we get? What do we see happen? Price finally trades back into our zone, and what do we get? It's beautiful. But you have to do it every day, and you have to be committed to marking up your charts, making your analysis, waiting for your setups to come. So, like I said, if we were just dragging this across, what do we have? The same exact instance that we had happen. The same exact instance that we had happen at the beginning of the year with Apple and whoever this is, probably going to end up having issues again. But we see the same movement. We bounce off a QP, we bounce off our quarter point, and we drop down 250 points, 250 points, 500, 250 points, and we see all our rejections. We see all rejections I mean, it's just beautiful off the quarter points. So on your indices, you're gonna want to do it. You're gonna want to put in your quarter points. I go down to my hour time frame, and we see the same. Um, we see the same rejections. We see where we want to be looking for optimal entries, great entries where we can catch a lot of money, and really just ride the market. So I wanted to go over the indices just briefly. We'll have more trainings going over it, and getting more in depth. But I wanted to make sure that we are incorporating the quarter points with our indices as well. JER 30, it is the same thing. So you see JER 30 and US 30 almost look identical when I change between charts, but it's the same thing. 13500, 13250, 13000. What do we see along our quarter points? We have this rejection, price comes, we get that double bottom, retest that quarter point, and price takes off for 500 points. This is a lot of money. That's flipping accounts on indices off of those type of moves. So what do we see happen? Come above, price comes, trades above this quarter point. What do we know about our EMAs? When we trade back to the downside, we know we're looking for sales. Where do you see that sale happen? Right at this quarter point. Look at how beautiful the price drops below. Price at this quarter point, price dropped below our 200 moving average and dropped straight down for 250 points. Test that, bam, and shot straight back down for another 250 points. So off that move alone in the week, you could have caught 5,000 pips pretty easily. So our quarter points are money makers. We'll combine them with the system. We'll have trainings combining it with the system and reading it with the system. But it's the same exact thing. We have our crosses, we have rejections, and we have a straight push to the downside. So like I said, this video is more so just to incorporate the quarter points, show you how they work with indices. I know we've gone over with GBPs plenty of times. So go through, set up your quarter points on indices. If you have any questions on them, feel free to ask in the chat. But I will see you guys on the next training.